Hey, what's up everyone? Welcome back to another Bitcoin Elliott Wave analysis update. Bitcoin is still ranging near the all-time highs, and we are figuring out on how the local timeframes could be resolved in order to either continue the trend or delay the trend just by a tad bit. There are only two ways I'm currently seeing this on the local timeframes in terms of how this is going to be resolved, and both are still leading to immensely bullish levels to the upside. But before we begin, please make sure to hit that like button, subscribe to the channel if you haven't already. Your support means everything to me. Thank you so much. Now in this video, I will do my best to make sure we stick within the boundaries of what the Elliott Wave Theory teaches us. So let's get started. And starting on the macro, the first scenario that we have here is very simple. I don't want to sound like a broken record player at this point, but the idea is just still working on the idea of an extended fifth wave. It would be in the minor degree on the macro, but here we're still working in the confines of 3 hierarchy degrees. And right now we are working in what could be an extended wave 3 of this macro fifth wave, but in the overall context of the larger macro, it is an extended fifth wave. And remember, within the literature of the Elliott Wave Principle, the extended fifth wave is actually quite common in major bull markets, within commodity markets that is, and it's safe to assume that Bitcoin is a commodity along with gold, so we'll treat it as such. And you can see right here within the actual literature, it does state that the extended fifth waves are quite common in major bull markets and commodities, and that's about it. It doesn't really build upon that, so it is kind of strange, and I wish they actually, built upon on why, maybe the market psychology approach, but I do have a little bit of extra ideas or factors or evidence-based approach on why that is actually happening. And this is why we're actually assuming a fifth wave extension is happening, because a lot of people have missed out on this. And the importance of this is that it's quite overlooked a lot. We don't want to be assuming extended fifth waves often, that is. There's no better time to assume it, however, than this current time, because a lot of people did miss out on the larger third wave, and that's where the fifth wave extension comes in, where the psychology of the markets is based on that people will get in these final fifth wave extensions that they missed out on the wave 3 extensions. So as you can see, this wave 3 is quite short, but longer than wave 1. However, we're assuming that this final cycle will be ending with a larger fifth wave extension. So that being said, that means that we're really in basically the peak validation of how these wave 1-2s are being built up. We discussed this over and over. We talked about how this wave 1-2 was in the intermediate degree being built up. We got a nice triple zigzag to the downside, and then we got another 1-2 of the minor here, and then 1-2 here, 3-4-5 should follow, 3-4-5 should follow, 3-4-5 should follow. So if this does turn extremely bullish, this would be probably the most sensible account or a sensible count for how we're going to be resolving this entire trend. It just means that the next round of players, those that are sidelined, that is, will be pretty much making up for the vast majority of the slope, these 3-4-5s, 3-4-5s. So that's the first scenario. This would be the ultimate bullish scenario. It's still leaning towards my primary idea. However, we do have one scenario that does have a little bit of a more logical approach that I'm starting to believe that this is going to become my primary idea, which is possibly a leading diagonal. Now, the implications here, if we're overlapping the first scenario on this current leading diagonal scenario, is that both still lead to the upside. And I think that's the best way we can organize it. I think a lot of people don't zoom out to see what the overall resolvement is for these scenarios. But as you can see, we all have these hybrid overlaps on how these waves are actually unfolding. And right now we can see that this leading diagonal, if we do get a pullback in the shorter time frames, it wouldn't be a surprise, meaning that this move here is all just corrective moves rather than seeing this as a series of 1-2s. Now, the importance of this, as I discussed in my live stream, is that one scenario, this scenario here, this leading diagonal, is actually completed in a technical pattern that has completed. From a pattern recognition standpoint, this is now complete or has another move to the upside before we get that wave 2 to the downside. Otherwise, you're also playing with fire in the sense that, sure, yeah, there is a series of 1-2s being built, but nothing has been truly confirmed yet. We really need to be moving out of these regions and sustaining a bull run for the next month or two, essentially without any strong pullbacks, right? Because these 3-4-5s, we're assuming that it's going to be at least maybe following the idea of alternation, which is going to be sideways 3-4s against how these 1-2s were all basically sharp corrections. So that would lead us pretty much for the next month or two to be very bullish if this scenario were to happen. But the more logical approach could be this scenario here where we are working in a series of overlaps where waves 1, 2, and 3, and 4 are all treated as corrective moves, basically, for this diagonal, because that's what a diagonal is portraying. It's an imbalance between the bulls and the bears of a motive wave, of a 5-wave structure, before moving to the upside, meaning that there is some weakness imbalance kind of confirming the trend more than anything else, and then reconfirming the actual pullback to retest the bull's strength, and then it moves up to the upside for a wave 3, and then we continue with those 3, 4, 5s at a later stage. But again, remember, the overall implication doesn't change, right? So in order to do so, how can we assess how this range is going to be actually result? And that's going to require us to actually kind of zoom in. So if we zoom in here on the 4-hour local charts, you can see that this would be pretty much the only way, in my opinion. I think that we could have what could be a wave 1, 2 here and another 1, 2 here. We do have some pretty nice structural moves to the upside as impulses. Not the best looking impulses, but it is what it is. And right now, what the most important thing is the major pivot points of these 1, 2s. We do have some really good structural nesting going on for these 1, 2s. So the beginning stage that is being set up for these 1, 2s is actually phenomenal. They're not real strong pullbacks. They're really just retesting the minimum expectation of Fibonacci pullbacks, 382s, the 236s. Those are the ones that you want to be looking for in a strong uptrend, especially in this latter half of the bull market. And then a same thing with here. This is the only troublesome kind of spot that we're trying to identify, and that's why we're just kind of ping-ponging back and forth between this scenario and the leading diagonal scenario. And speaking of which, this does right now, at the current time of recording, has a little bit more say into the actual price action. I just feel like this is going to be the scenario that might play out. But again, the ultimate validation, this should not be invalidation, it should be validation, would be breaking the $112,000 or $111,000 levels with significant volume. Now, if you hear me out on this, on why I think that this is becoming the primary scenario before we actually move up in October or so, is because if we rearrange all of these internal structures, 4 out of the 5 waves is actually quite significantly proving that this is working structurally as corrective moves. So if you look at this 1-2 pullback, we have a WXY, we have a possible ABC here, and this last move here does resemble more of an WXY than it does as an impulse to the upside, right? And because of that, the only drawdown to the scenario out of all the other strong points of the scenario is that this wave 1 was pretty long drawn out. In real-time analysis, we would essentially assume that this is going to be an impulse move to the upside, where we have this as a structured 1, 2, 3, 4, 5, where wave 1 was extended. During that time, it's still considered what is going to be the primary scenario as an impulse scenario. But if we're, now that we have a little bit more data to work with, I would say because of the remaining ideas here and so much overlap is happening, this idea right now in real time just seems to be the fitting scenario in just my overall approach. I would say that this idea just has the more higher statistical probable hit rate, in my opinion, where we're eventually going to break this trend line. Whether this is going to be a wave 1, 2, or an ABC to the upside of some sort, if you're treating this as an impulse, or as a WXY, if you're seeing this as a completed trend. And I would say that this is a completed trend more than anything else. Again, we're even respecting a lot of the internal structures of these A to C to the W's to the Y's for internal structural Fibonacci extension ratios. We see a 61.8, 100% being met here. The 100% has been met perfectly here, 100% as well here, 100% as well here, another 100% here. So there's just far more evidence from an evidence-based approach that this scenario just might fit. And if we're taking into account what has happened traditionally in the past, September has been, quite a red month, right? If we look at the actual years of data that we have from a monthly return perspective, the month of September is really possibly showing us signs that this month actually may be red. There's more probability that this month might be red. So look for a possible pullback here, ladies and gentlemen, if this were to happen. I'm not saying it's the actual case, but look for this validation and invalidation of both scenarios, basically. It would be an ultimate validation if we break this level and then we continue the trend. At least we can understand that the trend is to the downside no matter what. If we get a bounce here, we're going to expect some kind of partner leg to be matched with this partner leg at some later point, depending on the variant of the type of correction that we get. Whether it's an ABC, simple zigzag, that's the most minimal approach that we have to be taking, or some kind of variant of it, right? And if that's the case, this is the scenario that you want to be looking for. So with all the tallying up of the factors and the pieces of evidence and just checkpointing everything, this scenario just seems to be the likely case, in my opinion, that we're going to be moving towards a more of a corrective move to the downside in this month of September. And very interestingly, the month of October, we should be assuming a very strong move to the upside, right? 2 out of the, whatever, how many months this was, every single consecutive year, October has proven to be the most profitable month, right? 27s, we have 10s here, we have 47 percenters, 33 percenters, 60% back in 2013. Wow. And it's just falling right behind the month of February, which is traditionally also a bullish month, right? And October, if you guys all know, is usually when the markets start to get back into interested, waiting for Q4 to finish off a strong year. Christmas is approaching. So that is kind of a self-fulfilling prophecy more than anything else. But again, it really could be either or. I mean, we can even just traditionally say that we're going to be working against the crowd this time. There's always a chance for this time is different, right? And that would be this, where we just move to the upside. And then we have a very strong September, possibly, that we just continue the trend. Now, is this a possibility? Absolutely, it's a possibility. And in fact, this was our primary scenario, but I would have loved to see these impulses resolving quite earlier. And we had that chance quite a few times here, especially with the possible idea of this 1-2 being in the minor degree as a flat idea, and we just continued up, but we didn't get we weren't met with any real strong reaction. And in fact, we're just ranging here. But again, it is what it is until we actually break the $111,000 levels. None of these scenarios are confirmed. However, just in real-time analysis, I would say that this scenario has a little bit more weight, and I would say this is the count that I would actually go for, because even if we do break down, the trend line has been even confirmed for this scenario, and that furthers and deepens the scenario validation even more. Even if you're seeing a 1-2 pullback here, you're just basically also going to be retesting that trend line, and you have to really assume that the trend line is going to break back above. It's possible. We've seen that happen many, many times. So it's something to keep in mind. But if you want to be the more rational approach, this is the scenario to look for. So hopefully that was helpful. Thank you very much. I will see you guys in the next video, and make sure to subscribe, hit that like button, whatever it is. Do what you can to support the channel by liking the video, subscribing to the channel. And if you're interested in joining the Discord membership, the links are in the description below, along with the Patreon membership. Thank you very much. Have a fantastic rest of the week. Bye-bye.